The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Well, let's go. Dow is making a new recovery high, 26,042. This is, in fact, very important because it's now over that December 3rd high. That was what I was looking at as strong resistance, good candle. And as I've been mentioning, the MACD and stochastic are still very strong. My thinking was that it would be either a news event or just the basis of getting to a peak F that would see the Dow pull back quite sharply. In fact, we had a bit of a downturn yesterday. It still closed way off the lows, which was, for me, a sign to say, be careful. And right now, what we're looking at is the weekly chart is still in a single leg A. This is the 8th, 4, 5, 6. Wow. This is the 9th week of green candles. That's really impressive. That is a beautiful V-shaped pattern. And it says that the support in the 25,000 to 24,800 area should be extremely strong, no matter how much bad news comes out in the short to maybe intermediate term. Let's see what happens there. Most importantly, what I wanted to look at is I meant to do a little bit more of this yesterday. I mentioned it, but I forgot to go through it in greater detail. Paul had said, in fact, he didn't say, he really exclaimed out loud. What was this? Oh, yesterday asked me about the QQQ, and he says, today, I knew this wouldn't be mentioned on your show. Your ego is bigger than your head, and you're part of the establishment that fixes in. I actually don't even know what that means, but it's in capital letters, and it's got a change of color. But in even bigger letters, Paul says, the QQQ right now are doing a textbook head and shoulders top. This is the greatest short in our lifetime. You know, first of all, in the stock market, it just takes a long time to realize that you cannot say never. That's number one, because things just happen. Things just happen. That's the way it is. That's what the stock market is. It's an accumulation. It is a fixed price point of an accumulation of emotions at any particular moment. And that's all there is to it, right? But I will do this because it's important, because the QQQ at this particular time hasn't made a higher high above 172.80. So that to me is important. The other thing is, and then he sent another email to say, Apple, the trading in Apple stock looks fraudulent. How could it be so flat? So, Paul, first of all, if you're going to be in the market, I'm going to just suggest you cannot keep having these conspiracy theories. Life is not made up of just conspiracy theories. Let me just explain something. First of all, in the market itself, what you've got to be doing is you've got to have some objectivity. You've got to have some sense of propriety, your own whatever it is that you buy. So you've got to put your own stops in. Not only that, you want to use the knowledge of others that have got a lot of experience just as another form of information. It's not gospel. Nobody here can do everything right 100% of the time. You do the very best you can. So let's just get that out the way. Secondly, I've been discussing Apple for, I forget about this whole, I don't know what fraudulent is. If you look at this chart, what you're really looking at is when Apple made its high of 233.47 back in October, I was discussing the FANG stocks as possibly making what I call a hat trick top. I went into this is Technical Friday, so I'm going to get technical. I went into the whole methodology that I use that says when my monthly charts are in a leg D or maybe a little higher, but I'm starting to get a divergence, and that divergence is coming from the shorter time frames. And I think that the monthly has a chance to pull back sharply. I like to use the daily as a trigger for some kind of a sell signal that should go to a sell mode. And then that should impact the weekly chart. So I got a peak F at 233.47 in the Chapman wave after a cup formation. That's a double top, what I called, at the time I spoke about it. I said, this fits in the chapter that I call it. It's a double top. I call it the drop bucket formation, chapter 22, slide 366 of my CD. And it failed at a peak F, and then there was an alternate count F at 233.47, started to come down. And as it was coming down, I said, the daily has gone from a sell signal to a sell mode. Now I have to look at the weekly chart. The weekly chart had still made that long-legged doji, but it hit the 14-period moving average, but couldn't hold the 9-period. I said, I think there's going to be an H pattern, and there's a chance that the weekly goes from a sell signal quickly to a sell mode. And if you remember, at that time, I had the sell signal on the Dow, right at the top, one bar after the exact high. And I said, it looks to me like Apple is making a kind of a fat doji candle. It's hard to explain it in just visually. Look at that candle of October. And that if there was a close below the low, it would most probably turn into something more serious. So that's based on technicals. It's not based on fraudulent activity. It's not based on my knowing anything about Apple whatsoever. In fact, I don't have much in the way of Apple products. My wife probably has more than me, but I couldn't care less. I'm only looking at the chart. What was my target? My target for a long time was that there's a chance, although it was up in the 220s or something, that if it broke key support, that it could very well hit the 200-period moving average in the weekly chart, and that was at 149. It went down to 142. Round number low on the 26th. Had a beautiful rally to a peak E doji high, very nice percentage, 142 to the 175 area. Now it's pulled back and it's making a cup formation. There could be another failure right here, but it hasn't failed yet. So to get the QQQs and the Dow to be impacted, because Apple is quite a big part of each, you would need to see Apple go and break the 160 level where the gap up was, 160.23 on the January the 30th. Well, we're looking at a chart that's just stable right now, and the MACD is still very good, but very close to turning down. Stochastic is not in the daily, it's at 65%. The weekly has had a nice turn with a crossing of positive action between the slow-moving average, the red one, and the 9-period differential, the green one. Histogram has just gone for a fraction. It's in not quite positive. Yep, just positive territory as we speak. And I'm looking at this and I say, I don't know about fraudulent. All I'm saying to you is there's a really good chance that Apple is going to be a laggard a little while longer. That's what I've been talking about for some time. It could even make an arch formation to retest the 147 area. But as far as I'm concerned, there's nothing abnormal about this chart formation. It could be a Japanese stock, it could be an Israeli stock, it could be a Chinese stock, it could be American. The pattern is exactly the same. I defy anyone to see anything fraudulent in this particular pattern. I'll be back straight after this break.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Just to finish my little Apple epilogue there. Under 164, it's at 172 right now. Trading under 164 on a weekly basis, that is a close any week. Under 164, Apple could go down to the gap in the 150s. And if there's this cup formation, I think it's going to have a tough time unless it just spirals right through the 176s. And then all of a sudden, 181 is the 200-period exponential moving average. That comes into focus. I had a quick question about the E-minis. Yeah, that made a peak E, made a peak D in the 2-minute chart. Then it made that cup formation I've just been talking about, the same thing. Except Apple hasn't made a right side high yet in the shorter term of the daily chart. So this is E. But as long as there's news out there, in a way, any short that is in place right now, if you can survive the day and there's interpretation of weakness, even then, a weakness coming in on Monday, even then you've got to be a little careful here because the patterns that we were looking at here, oh, and there finally got that D. Okay, you got that D. I knew that was going to happen. You went to D in the 10-minute E-mini, and so it's D in the 10-minute, F in the cup formation in the 5-minute, cup formation in the 2-minute. I made a high today so far of 27.9450, trading at 27.9050, and anything can happen on the news-related front. But if there was no news to come out for the rest of the day, I would have said, hey, I think we might have made the intraday top right there at 6 minutes past 12, noontime. That is at 27.9450. We'll see. But we're news related right now. So, okay, what I want you to do is to get into I just need to check something. Yep. So transportation index, IYT. IYT is trading not as well as the Dow or the others. It's down 0.39%, down 75 cents at 190.66. Made a high of I must just double check if that was written correctly. 192.27 on the 19th, and it's above the 200-period moving average, but I suspect the 186 level, that 200-period moving average, is going to be tested, and we slide under it a little bit into the 182s over a period of a few weeks, and we could make a sine wave just wiggling and woggling around the 200-period exponential moving average. It would take a spiral into the 197s in the next week and a half to really make a difference. Good. Got that out the way. The TRCCI is what I wanted to look at here. What is the TRCCI? It is the Thomson Reuters Commodity Equal Weighted Commodity Index, trading gapped up. It's up 183 at 406.87. Got a trend line right there. That would be resistance. And if it can get into the 407.30 area, that 408.77 200-period moving average will become a target. I believe it is going to become a target. I happen to like the whole commodity area right now. Now, of course, that should be impact. Let me go through this again. Anyone who didn't hear me with my interview yesterday with Tom, it was interesting. Earlier in the afternoon, I had an interview with over at Financial Sense. Every few months I get interviewed by them, and this was by Jim Pavlova. Oops, let me just get this right. And what we were looking at is I was talking about different aspects of the market, but what I had mentioned is that I think that 4 things are happening here that are kind of under the radar. And let me just get this here if I can. And one of them being that within the context of the key ingredients that I like to look at, which is the bonds, the chances are that we might be seeing a move towards the interest rates starting to move up. Now, since the 1980s, 90s, I've been talking about the Japanization of our bond yields going to zero. I think that there could be a change in that. It takes a long time for changes to occur. And that suggests to me there's a chance, because the Fed would really like inflation to, they need inflation to be able to that's how they monitor, that's how they use benchmarks, that's how they are looking at the economy. They want to see that there's some kind of a stimulus going on. So if rates start to rise, they don't have to scream higher, but if they start to rise, number one, and if the soft commodities, that is the commodity we've just had, gold and silver spiraling higher, oils come back quite nicely. But if the grains, because of China, I don't care what it is, but if the softer grains start to get purchasing power, or at least get pricing power, let's put it that way. Look, wheat, which is just stuck at the lower end of the range at 488, and corn, which tried to rally over the last couple of days and is now off the low of the 369 area, it's at 376. If you can see some pricing ability in them, and that might mean that it's an artificial prompt because it comes from outside buying, it's not from internal, there might be a plethora, there might be just a lot of these different products out there, and that's like oil has been stifled in breaking out to the upside because there's a lot of oil around. So maybe that's part of it. But if you can get pricing power, so that's another area. Then something that's also quite important is within the context of the markets, you've had some stocks just screaming to the upside, but the Amazons and the FANG stocks, which really led the market in psychological and all sorts of manner, but physically the price was unbelievable. Look at Amazon going from the 500-600s just 2 years ago into the 2000s. They need a bit of a break, and that's really what I'm saying, that there could be some kind of a rotation going on. That's why you saw copper suddenly perk its head. Look at that, copper, beautiful, up 0.049, up 1.69% at 2.94. So I think the reason why one of our copper stocks is at a very nice percentage gain for us. I think that this is an area that, as I say, 4 areas. It's interest rates. It is the commodities. Let me go back to the TRCCI. This is broad. This takes in all equal weighted commodities. Coming off a bottom, doesn't look fantastic, but it really is starting to improve. That's a good sign. And within that context, the dollar, and this is going to be for me the really big challenge. As you know, I've been for subscribers, we've been looking at the dollar positively since the buyback in April of last year at 90, and 90 hits 97 twice, pulls back to 95s twice, goes back to 97. Now it's at 96. It's holding really well considering what's going on. And my thinking here is that this is countries are buying the dollar because America, they don't know where to put their money. So in one way or the other, they're able to see that the best economy in the world at this particular time, America, is holding well, and that's where they kind of want to put their currency. So we're looking at multifacets here that could be just on the cusp of changing in what has been a long-term trend. We'll see. Day is young. We'll be back. Dow's up 179. Basil Chapman, Tiger Technicians Hour. Technical Friday. We're going into the nitty-gritties of gritties and nitties.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Someone just mentioned Torchlight Energy Resources spiraling high, up 14% just today alone, up 1.62. No, it is at 1.62. It's up 21 cents. Oh, that's amazing. Hey, good eye, Denner over there, who pointed this out to me. Question, Basil, are you familiar with the gold to silver ratio? There are a number of people that use it, but we used to have someone in the den who for years used to be trading it, and he put on trades based on the ratio itself. It's not my expertise, so I'm just going to avoid it. but it certainly works for some people. Let me just do this. I want to say, oh, there it comes back. All right. Your sensationalism is off the chart. You remind me of a weather forecaster. All right. Well, that's the way it is. That's Paul coming back. Hey, Paul, we're done. I've given you the grace, good graces. I'm sorry. You're out. 145.81. We're up 181 in Visa. ABC, this is leg D. Now, I just wanted to show you a couple of things. Remember yesterday I was talking about, I said KL stock, maybe it was the day before, I don't know, I do these things all the time, so maybe I'm mistaken the day. No, it was yesterday. I said KL, or maybe the day before, I said KL is on the Investors Business Daily Top 50 list. This is KL, is called Kirkland Lake Gold. Had a spiral spike, a gap up yesterday. Today it's giving a little bit back. It's at 34.92, down $1.10. Looks to me like it's got a pattern that says it wants to test the 33 to 32 area over the coming week or so. We'll see if that happens. I was looking at Team, and that was the one that I said, Alessian, I don't know how to pronounce that. Alessian Corporation still looked good, but it made a peak F/C. I think it's an F, I said. We'll see over the coming few days what happens. Well, it's up $1.88 today, but it's under the one. It's at 104.92. It's under the 107.20 high on the 13th of February. So we're going to watching that, but it's only a leg C in the weekly, and that should go to a new all-time high. Beat, you remember I said Beat is something we were interested in buying a long time ago, and then we left it, and it made a peak F, and I drew in the arch formation. I said, I think this has a good chance to be pulling back quite a bit, as if it takes out the left side low, and that was a low of 75.60 from the 11th. The high that was made, the all-time high that was made on the February the 5th at 80.92, trading right now at 67.24, down 6 at 67.24, down 8.31%. Gaps down, obviously bad news. Peak F in the weekly chart, leg F in the monthly. We'll be watching this because it's in an area, medical devices, heart monitoring, biotelemetry, Inc. It could have quite a bit of a pullback here. The next thing we're looking at is VEEV. This is something I've watched for ages. It just got away, and I drew the channel. And I said, what I'm looking at here is the same kind of channel that I think we're looking at in something like Box, what was it? Box, Bing Box, XPD, BDX, Dropbox. There we are. But it's in the channel, and I didn't have a chance to do it, but I wanted to draw in what would happen if it took out the channel, and it did it for 3 days. This is the third day, but I need 3 full days. So we'll go into Monday, and then the pattern I would have drawn was this with a spike. It might make a new recovery high. I'm even going to put it in as if it could, and then come back down and then start to take out the left side low. This is the pattern I'm anticipating for VEEV, a fabulous company, Viva Systems Inc. Can't remember what they did. I must have written it in some. There it is. Cloud-based business solutions. Everything's cloud-based business solutions. Leg D in the monthly, leg D in the weekly, and peak D doji high 4 days ago. I think it's going to have a digestive phase, but this is what happens in channels. Unless there's bad news and you gap down, and now I'm going to do a mea culpa in a moment, there should be a choppy, now starts the big choppiness of this. Instead of this narrow little up, little pullback, up, pullback, now you're going to get sharp moves down, sharp moves up, and the parameters start to expand. Now, if you're looking at BDX, was a box, no, what did I say? Dropbox, DBX. I apologize, Ollie. You were absolutely correct. You spoke about shorting. I wasn't sure about the shorting, but I did draw in a pattern, the same pattern that I just drew in. This, in fact, when we were looking at it, it was trading at, I think it was in leg D, but it hadn't quite gotten above. It was about 26.11. It hit 26.49, and then it had an inside day. I know it had a day that took out the channel, this up channel, red line, and touched, and then just pierced, but closed above both the 14 and the 9-period moving average. Bad news, must have come out with earnings today. Up today is the 20, whatever it was, last night, the 21st. Just as you said, Ollie, congratulations. You did it. I hope you didn't listen to me and you did your own homework and you got a really nice pullback. I said as a pullback, I could see this pulling back. I wasn't sure that it would gap down, although I said you never know with earnings reports. That was number one. And number two is my pattern has gone below what I thought it would hold first of all and then rally. So instead of holding the 2430s, it gapped down to today's low is 2303. 3 points, that's 11, 12%. Hey, that is a very nice move. But what I had said is this is one of those that, unlike VIV, let me just explain right now. VIV is what I love in the chart formation. This is what I want to look at on a major pullback. Dropbox is the one that I said, I don't know yet how it's going to pull back, but looking long term, how it holds in this particular phase is going to be very important, because if and when it ever gets above the 29 200 period moving average in the weekly chart, then it could start the monthly move up. But at this particular point, you were 100% correct in asking me about this as a short, and I said I personally wouldn't short it. Hope you didn't listen to me, because it was a perfect short. So that's that. Next question I had was the banks. Let's see, Goldman Sachs. What's the? I don't know what the question is. Goldman Sachs. Yeah, it's just meandering. See, it's taking its time. It's more like a right shoulder failure. Maybe I'll get my CD out and show you the patterns. More like a right shoulder pattern. Oh, we have Mark in Fort Collins. My mistake. Mark, how are you?
Good, how are you?
I'm good. I'm sorry. I just didn't look down there because when I last looked, there was no one on the waiting line. Question away.
Hey, I'm a little confused on the wave count on the SMH. I'm looking at potentially taking a position in the SOXS with maybe like a 5% stop. Looks like it's getting pretty toppy, but I wanted to get your thoughts since you're the master.
All right, so we've got SMH, that's the semiconductor ETF, and I just have to be open about it. We actually short the semiconductor index. We still short this from just a couple of days ago. Now, what I am looking at is it's 104.17 right now with a high of 143. So that says to me, let me just move that away, that this now gets you to the D that we were looking at. So let me go through the count. The count started right at the bottom at 80.71 on the 12th, on the 26th of December. It goes to a peak A and a B, and then it pulls back quite sharply. Then it breaks out. It goes to a C and a D. The D, very clearly, you'll have this as well, is on the 18th of January at 93.32. Pulls back, holds the 14-period moving average, and it climbs up to an E, and then it goes to an F. And that F is at on the 6th of February at 101.97. And that said to me, I've got to put in an alternate count, and that D was an instant restart.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back, and so we're on with, right at this particular moment, we're on with Mark in Fort Collins. We're looking at the SMHs, and they're at 104.18. That's a it's called Market Vector Semiconductor ETF. So when it got to D, right here on the 18th of January, within 3 bars, it gapped up and it started a new leg up. I call that an E, but when you look at the MACD, the MACD had held so strong that my inclination was to say there could be an alternative count, but I'm not going to put it in until it really shows itself. So then when it went to FG back at the 6th of February high of 101.97, it pulled back for just 3 bars, and the 4th bar started another move up. And what we're looking at is yesterday it confirmed it was a G/C. Now, of course, you can't get an H, so it turns out to be a D. This is the area from D to have a second in a move like this. I've seen a couple, but it's very seldom to have a second buy mode start right now. So that says to me D could even go to an E, but right here where the MACD is just starting to turn down a little bit, hasn't crossed negative, stochastic still at 91%. This is where other things can happen. Now, I didn't want to see it break above, really into the 105s, but it's at 104.31 right now. 104.17. So far, this says, watch this closely, but that single leg A up in the weekly chart says, hey, you've had one red candle, but you've had higher highs since the low that was made, and this is the 9th week. Surely there should be some kind of a pullback, but the MACD and stochastic remain strong. I thought that we would get maybe a pullback yesterday, and if there was follow-through weakness today, then you would start to see the MACD moving average convergence divergence start to weaken. It'd be starting to get ready at least to attempt to cross negative. So far, it's holding very well. So if you haven't got any position yet, I'm going to say to you, let's see what the close is like today. If there's a sudden huge decline at the end of the day before 4 o'clock, then maybe you could start to set up something. But maybe the safest thing would be just to wait for Monday. And if it gaps down on Monday, that's fine. Better than being in the position and then kind of your first position suddenly seeing a gap up on Monday and you get taken out. So would you be using options or shorting or using the SOXS?
It looks like the MACD is crossing positive on that.
Yeah, it's still holding very well. It's not crossing negative. The histogram is starting to shrink, but it hasn't turned negative yet. So my question is, you'd be going to the SOXS?
Yes.
Okay, so if that's the case, I think that if there's no sell-off by the close today, I wouldn't do anything. If there's a huge gap down on Monday, for whatever reason, there's an assessment of what's been said and it doesn't look great, and all of a sudden Monday gaps down, that's fine, so you'll miss a little bit. But maybe it's better to get it with the trend on the way down than on the way up, because we don't now, because of the move up, I need to see a reversal because the candle itself is actually a pretty good candle. Even though, look, if you look at the last 1, 2, 3, 4, 5, 6, 7, 8, even if you go to the 9th candle before the big green candle of the 8th, if you look at the 9th little doji candle, the 11th, then the next day, the 12th, it gaps up. And each time there's been no real power move to the upside. That tells me that there's just been concerted buying, and therefore this particular pattern has the pattern that we were looking at in those strong up channels. When it starts to break down, it's going to take a whole bunch of pullbacks and bounces to really turn the MACD negative and to get the stochastic from 91 down to 79%, under the 80% that I like to see for negative action. So I think you've got time. I don't think you need to rush into it. If there is a turn down by the end of the day, it'll suit us fine. But if you haven't got a position, I'm just saying risk reward. We don't know what's going to be said. We don't know how the market, maybe the market sells off on the news. Maybe it explodes another 200-300 points up on the news. We just don't know the reaction of the market. So I think to feel a little more confident in the risk reward situation, I would rather see a sell-off on Monday, and I'll also be talking about it on my show. So I don't think you need to rush unless there's a very sharp sell-off after there's some kind of announcement, maybe 3 o'clock. I don't know when it's coming out. But if by 4 o'clock there's been an announcement and the market is responding negatively, maybe then you could just start something. You can always add to it. That's the way I would go about it. I do think that SMHs, the semiconductor index, it's really important that the semis lead the next move down because they've been the arbiter of trends for a long time, up and down. So we'll see if we do get a pullback in the semiconductor index. I don't know if that helps you. I hope it does.
Yeah, it's always good advice. I appreciate your insight. Thank you.
Thank you very much for calling. And that was Mark in Fort Collins. So here's a couple of things that I want to look at. A question about LMT, which is in the defense sector, not a defensive stock, but defensive stock. Hey, talk about defensive stock. Kraft Heinz was supposed to be defensive. So here you've got limit LMT. Yes, and I've never seen as many Chapman wave instant restarts. That's peak D going straight into leg E/A as the last 2 months, let's say. It's just incredible. So this is E/A, and then it goes LMT's Lockheed Martin. It goes B, C, D. Right there. How many Ds have we got in all these different charts? It's amazing. Right on the 200-period moving average. And yet it's gone sideways. It hasn't turned down. That makes the magnet, LMT, Lockheed Martin trading at 305.97, up $1.46. That makes us a very strong support area between 301 with resistance at 309. That's what we're going to be watching. Question I had was Boeing. Okay, and Dan, what is that? Boeing. Boeing is up today. It's leg F extension. Now the MACD is just turned down, but I don't like it when MACD's turned down narrowly. I want to see a big, is it theta? I must not Dave White. What do we call the red line, the quicker moving, the green line, the quicker moving average that's going sharply below a red line, the slow moving average? Is that theta? Is that the distance between the two is accelerating? That's it. The distance between the two, I want to see accelerate. When it's narrow like this, it's still giving some support, and the stochastic still at 95% for Boeing. Spectacular move. There's that Chapman wave circle, and you broke out to the upside. And another question I had was, where did it go here? Just wanted to get to, oh, that's right. The E-minis. The E-minis made that peak here at the doji high. I didn't have time. I meant to put in a down candle. That was a double top, and that was a peak F. And there I put the inverted hat because the E did take it below the 9 period, and it took the MACD negative and stochastic. But let's go this way, and you can see that that's going to be a little inverted hat. So, and a D in the 5. So we've got that pullback. It's still subject to news, but you did have one of the deeper moves from the E-mini to down the downside, 2794.50 down to 279.50. 2789.50. Wow, a whole 5 points down. Isn't that something? Well, that's the deepest correction we've had was during the show. Let's see what happens after this. I'll be right back. We've got one more segment to go. Give you a synopsis of what I'm looking at this particular time for Monday, depending on what happens at the close today.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hey, folks, don't forget, Steve Rhodes comes up straight after this, then Dave White, and then Dave White will be on with Tom O'Brien at 3 o'clock. Let me just see. I got an email. Listen to your DBX comment in the show, impressing that you mentioned it in spite of your error. Would have been much easier for you to not mention it. Probably what makes you so unique and valuable, the objectivity. Wow, thank you. Actually, I had a little short position, closed it out at the open today for a few % profit. Should probably have held it. Have a good weekend, Ollie. Yeah, Ollie, congratulations. You listened to your inner self and not to the outer me. Congratulations. So, yeah, we were looking at it pulling back, but it was the steepness, and that's what you picked up. So we're looking at question in the den. Could I look at Nugget? Nugget is the direction daily gold miners 3 times long. I've got it as the most conservative count here as either a D or a D or an F. I could give it a brand new buy mode as a new B. I'm going to be conservative. It's got the doji candle. I'll make it real simple. Nugget trading at 22.87 up 95 cents, up 4.36 because it's 3 times long. If Nugget closes 2 out of 3 sessions next week above 24, that'll really, really be impressive. That'll be very, very good action. If it starts to pull back and is suddenly trading under 20.80, it says time for a little bit of a breather. I'm saying a little bit of a breather because I still see buying coming into gold, and I still don't yet see major selling coming to the dollar. So it says there is some support there. And at this particular point, let me just, as we're about to close, folks, have a wonderful weekend. Email me your comments. I don't care whether most of them are actually, I hardly ever get rude ones. That was just a personality thing. That's what I think. So 96.57, down $0.05, holding really well. Let's see what happens after the announcement today. We know exactly what the parameters are. We've got them. They're very tight. The close in the dollar anytime next week below 96 says, uh-oh, watch out, the dollar is going to suffer, and gold will rally. I think right now we're in a little bit of a digestive phase, and I'm looking out into March. I think there's some very different parameters that we're going to be looking at and sectors we're looking at in March. Hey, have a wonderful weekend. Check out my opening call, my daily newsletter, go to the front page of TFNN. Stay tuned for Steve. Have a great weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.